Welcome back, everyone. I'm Jordan Giesecke, and this is The Limiting Factor. As a change of pace from my usual Tesla earnings call video, today I'm going to be speaking with Iola Hughes, who's the head of research at Rho Motion. All of the comments in this earnings call from Tesla that were battery related had to do with the impact of recent political developments on their Megapack business. I can't think of anyone better to speak with about that than Iola, who has her finger on the pulse when it comes to the intersection of batteries, the grid, and regulation. Before we begin, a special thanks to my Patreon supporters, YouTube members, and Twitter subscribers, as well as Rebellionaire.com. They specialize in helping investors manage concentrated positions. Rebellionaire can help with covered calls, risk management, and creating a money master plan from your financial first principles. So, first off, thanks for all the amazing slides that you've done over the years and that you post on X. I've used so many of those in my videos, and I hope you don't mind that I've been pirating them and just nabbing them.
No. We appreciate it. We always like to see your videos and your insights. So it's great to know that we can contribute in some way, and obviously great exposure for us as well. So yeah, thank you, and thanks for having me on as well.
Now, to set things up, there's a lot of concerns at the moment around Tesla's Megapack business due to tariffs and the impacts of the big, beautiful bill. But there's also a lot of euphoria over its potential. So what I'd like to do is use that as a springboard to get a feel for the current realities and what's actually happening. Because it's the euphoria is probably a little bit too euphoric, and the people who are anxious about it may be too anxious. So let's kind of zero in on what's actually going on here. So the first question is, how have the tariff rates on batteries actually changed over the past couple of years?
Yeah, for sure. So I'd say the storage market has had a lot of uncertainty, particularly over the last 6 months, really. Everything has been a little bit up in the air around tariff rates, around what's going to happen with the investment tax credit, what's happening on the supply chain. So a lot of uncertainty has been feeding into the market. When it comes to tariffs themselves, we've gone through in the last 6 months tariffs that have gone up to close to 200%. They now sit at around 40%, 41%. And within that, you essentially have your Section 301 tariffs, which are currently sat at 7.5% and set to increase to 25% at the end of the year. You have your various reciprocal tariffs, which are currently on their 90-day pause, so are at a lower level than they will be come August. And those are the main ones right now. And then you also have further ones coming down the line. So there's the Section 232 investigation into critical minerals, which is due later this year, which may also impact battery prices. So it's almost a full-time job just staying on top of what is the tariff level right now. So for anyone in the energy storage space, it's definitely keeping them busy, and it's been a lot to deal with.
Well, I'm glad we have people like you to outsource that to, because I've found the same thing. It's just like I can't even keep up with it. But for a little bit of context and perspective, wasn't there already like 100% tariff on batteries as of last year from the Biden administration? Is that correct?
So you had different, basically it depends on what its use case is. So if it's a battery destined for EV or a battery destined for energy storage, you have different tariff levels. So under the 301 tariffs, essentially you got a 25% tariff on Chinese batteries destined for EVs, but a 7.5% tariff for Chinese batteries destined for ESS. And really the reason behind that is because LFP is the chemistry of choice within storage, and really there isn't any alternative supply that is built up yet. If you just immediately put that 25% tariff on ESS batteries when there isn't an alternative, you're really just punishing that market. So there was a bit more flexibility with that ruling that was like, oh, we'll give them time to bring their supply chain online. And this year for the first time we now do have some LFP manufacturing in the US. The volumes are still very low. The market is still heavily reliant on Chinese supply, but at least there's been a bit of a breathing room to kind of get to where we are now.
Okay, so there was sort of like a 25 to 30% tariff in place last year, and that's fluctuated quite a bit this year.
Oh yeah, yes, a lot of fluctuation, and I think it's important as well to think about other parts of Tesla's supply chain when it comes to tariffs. So one of Tesla's big plans is to bring LFP manufacturing to the US and to supply the Megapack business. That facility is reliant on CATL equipment, and obviously when there were large tariffs in place, the equipment would be facing those tariffs. That's one element, and then the other one is around where they actually source the materials to build the batteries. So right now, in terms of LFP, cathode active material, and anode active material, those supply chains are again heavily concentrated in China, and you will be facing tariffs for you importing those materials. It means then your cell cost is increased. So a lot of dynamics for them to consider when they're considering like their next 5 year plans as well.
All right. And how do those, because battery cells and battery packs are just a portion of the cost of a Megapack product, for instance. How much do those tariffs affect the end price of the grid storage project products?
Yeah, so it's an interesting one. So our understanding is actually when it comes to Tesla, they are largely passing on their tariff cost to their consumers. So that seems to be the way that it has been dealt with. I don't think the reality is that will always happen. When it comes to Tesla's pricing structure for megapacks, there's definitely flexibility in there. So whilst you can go onto the Megapack website and see the list price of a Megapack at 220, I think it's around $220 a kilowatt hour right now. The reality is that if you are building a large project, you're going to be getting a discount on that. So you may be looking at a price closer to 180, $190 per kilowatt hour.
Oh, really? That's like the actual price that they're selling it for, not their production cost.
Yeah, exactly. So there's definitely a discount which will come to certain developers and players in the space. Um, that's still a huge premium when it comes to a Chinese system, for example. So right now a Sungrow system, for example, maybe at a price of around 120 to 130. Tariffs obviously change this dynamic quite significantly because it's very hard to pinpoint how much of that tariff will be kind of passed on. But that would be your kind of uh, price at entering the market if we were not looking at tariffs.
So that would be a pack coming into the United States for 120, and then you add the tariffs on top of that. Is that what we're looking at?
Exactly, yeah. But yeah, it again would depend just on that structure because some players will be more willing to absorb some of those tariff costs. Some will be passing it on. When we think about how the price declines we've seen in the last few years, and if we look at system prices, for example, they've essentially more than halved in less than 2 years, which is crazy to kind of think about that. Sell prices haven't fallen at the same rate, so we've seen a sell price decline of about 30 to 40%. So you have this interesting dynamic, and also there's you know things like in the Chinese market you have much tighter margins. So we see system prices even as low as kind of 60 to $70 a kilowatt hour, where in the US market they're easily double that. So there is quite a big margin room that some players have that they can kind of potentially absorb and not have to pass on that full tariff cost.
So, say compared to like 2 years ago, then
Mm.
we do have these additional tariffs, but we also have significantly reduced production cost and prices overall due to production cost reductions. Is that right?
Yeah, absolutely. So, I mean, the scale of production is obviously one big thing. I think the Megapack is a good example. If you think like April 2023, your Megapack price was close to $500 kilowatt hour, and now we're looking at that kind of 200 mark. So it is really impressive that decline. I think there's a couple of reasons behind that. So, firstly, scale is obviously bringing on Lathrop obviously kind of changed the entire dynamic for that manufacturing process. Innovation at the cell level. So we've seen a real transition in the market from to kind of larger format cells. So we used to see the 280 amp hour cells, now we see the 314 amp hour cells, and particularly that transition. These are essentially higher energy density cells within the same size casing. It's kind of a plug and play. You can kind of bring that to the market with not too much changing in your product. And then with things like that, you also start to get to higher energy density systems. So a 20-foot container back in the day, Tesla's Megapack was kind of 2.6, then we went to 3.9. I'm sure it won't be long before we see a kind of 5 megawatt hour container, as we have seen from a lot of the Chinese players. And all of these things help bring down your project costs because, if you're thinking about things like land, which is one of your big costs when it comes to an energy storage project, if you can install less systems on your for the kind of equivalent size project capacity, you can bring down a kind of cost saving there. So that's a big one as well. And then the final one would be around competition. So the market in 2023 looked a lot different in terms of who you could procure a system from in the US market. The Chinese players were supplying cells, but they weren't really vertically integrated in the way they are now. And now you have essentially very fierce competition from a whole array of both kind of traditional EV cell manufacturers, but also these kind of dedicated energy storage cell manufacturers who are entering the market.
Yeah, that's really impressed me because it seemed like 2 or 3 years ago Tesla was the major player, and then there's just been an explosion from like CATL and BYD, like doing top to bottom systems. All right, so this raises several questions for me. I'm not sure where to go next, but I'm going to stick with my questions. Then we'll loop back around and pick up some of these other things if we have time. So Tesla said in this earnings call that, quote, although the recent bill was not favorable towards solar, we believe solar projects will still get built because the energy is necessary. The projects are well developed and they're ready for execution. There's really no alternatives in the near term given gas turbine lead times and pricing. End quote. Now, that flies in the face of most of the analysis, or a lot of the analysis I've seen out there, which is something like half of projects will be canceled or even completely decimated. Can you help circle that square? What's your expectation here for what proportion of these projects, these solar projects, continue to go through in light of the investment and production tax credits getting axed?
Yeah, so I think this is actually quite a difficult sentence to interpret because there's a number of different ways you can look at it, and I think what it comes down to is timelines. So if you were to interpret that projects which have secured a Megapack or have contracted a Megapack will still get built, then yes, 100% would agree with that because these projects would likely already be classified as under construction. Based on the current rules, obviously this is pending the executive order outcome, which may disrupt some of those safe harboring rules and bring some of those things into question. But generally, if you have procured your systems already, you might be at a relatively advanced stage in terms of development, and that means that you would be able to kind of safe harbor, get it built, get it under construction by the end of the year, and therefore still get to the tax credit. The other way to think about it, and what we think is quite positive, is essentially, if you are building renewables, if you're building a solar farm now, and you previously weren't planning on pairing it with batteries, you now have a much bigger incentive to pair your project than you did previously. So, you could still get the ITC on the storage portion. And we did a little case study on this earlier. So if you assume that of your project cost, 55% solar, 45% storage, this can obviously vary significantly depending on the project capacity, the duration that you're installing there. And what that means, so previously you'd have got your 30% ITC across the entire solar and storage project. So essentially you'd be losing that solar element, but you'd still be getting it on the storage. So that would come out at about a 13.5% tax credit across the entire project. So there is suddenly, quite a nice incentive to build solar and storage where any solar that was being built, you might want to kind of reassess that. So that's definitely a bit of an upside that we'd see there.
Okay, so in the short term, most of these projects are probably going to go through and they're going to scramble and do the best they can to make sure they qualify for everything. But then after that, in the longer term, we might lose some solar projects, but you also might pick some up because of the incentives that the battery storage can pull in. Is that right?
Exactly. And when one of my colleagues who works on our solar forecast recently had our kind of updated numbers, the way that we're kind of seeing it is more of a dynamic shift in terms of when things are happening rather than an overall demand loss. So you have this kind of pull forward over the period of out to kind of 2027, where people are looking to get those projects online as quickly as possible, tap into tax credits. You have a couple of years of lull after that, where things slow down a bit, essentially those projects that have been pulled forwards, and then we start to see a market recovery beyond that. I think it kind of comes back to, again and again, the kind of fundamentals of solar and storage being incredibly both cheap to deploy these days and kind of time efficient, particularly at a time where things like getting a gas turbine may see kind of looking at a 4 to 5 year wait time. Being able to deploy solar and storage quickly is definitely very beneficial.
I have to readjust my question here because you're giving me little pieces of information that I didn't expect.
Oh,
So overall, you see the grid storage batteries like Megapacks, they're going to continue to thrive in the US despite the headwinds from tariffs and the big, beautiful bill because they're, one, they kind of sidestepped some of the impacts of the big, beautiful bill. And on top of that, they're at a price level now where they have a fundamental economic advantage and they're good value for money, even despite all this.
yeah, so I think the fundamentals, yes, are very strong. The ability to still operate even without an ITC, given the price declines, is very positive. But at the same time, the introduction of particularly the prohibited foreign entities rules under the bill will make it more difficult to qualify, and it's ultimately going to be less storage is going to be installed than under a previous IRA scenario. So I think we do have to keep that in mind. We're expecting growth, but it won't be as great as it was previously, but under a kind of fully subsidized market. Um, those prohibited foreign entity rules, I think, are worth just talking a little bit about as well, because essentially what it means is you're looking at the entire supply chain. So it's not just about where your system comes from, it's about where your cell comes from. But then if you're manufacturing a cell in the US, it's about where your cathode comes from, where your anode comes from. And particularly on the cathode side for LFP, because that supply chain is so heavily tied to the Chinese market, it's going to be very hard to qualify for 45X, which is the manufacturing tax credit for cells. So you start facing these other kind of dynamics in the market where a cell which should have been, the cheap cell, maybe it's not going to be as cheap anymore. Then you have tariffs coming in that are going to push up prices. Anode active material now is currently at a 160% tariff rate. So there's so many different dynamics that are kind of going on and impacting all the elements of the supply chain that it is going to drive uncertainty and it is going to make it more difficult than under a previous scenario.
All right. I'm glad you brought that up because it does seem like overall that's going to be the key bottleneck or difficulty or challenge for Tesla
Yeah,
is trying to upgrade their supply chain to be able to qualify. And I know they are working on that. It's
yeah,
just a matter of how quickly they can do it. So are they going
yeah.
to be able to get all that in place before those rules come in? Or is there going to be a gap there of 1 or 2 year where they have to kind of bridge it and eat those extra costs?
Well, I mean, what one part that definitely, I mean, for sure going to lose is the 45X module credit. So currently they're getting $10 per kilowatt hour for their module manufacturing, pack manufacturing at Lathrop, where they're taking the CATL cells and then doing that assembly themselves. In order to qualify for that credit, even the 2026 requirement is to you wouldn't be able to do it when a cell makes up say 70 to 80% of a pack cost. It would you wouldn't be eligible. So that's going to be a hit that will come in the next year.
And on this note, in terms of Tesla said that they're looking at sourcing batteries from ex-China suppliers. Now, to
Mm.
qualify for these foreign entity of concern rules, does it just have to be? And because I've seen differing opinion on this, does it have to be a domestic supplier, or can it be just a supplier that's outside of China? Or are we waiting for clarification on that?
So Guidance is definitely going to be needed to get the full understanding of it, but certainly the interpretation that we have of the prohibited foreign entities and the specified foreign entities is around ownership structure rather than where you are domiciled. So any of the Chinese battery manufacturers who've set up facilities in Southeast Asia, for example, that were considered kind of the hopefuls because these are a workaround of tariffs, would lose eligibility. Even facilities in the US, so for example, the AESC Envision facilities that are supplying cells to Fluence, because of their ownership structure, they would potentially be at risk as well. Planned facilities like Goshen, who are going to build in the US, will also be at risk. So yeah, it's not 100% clear yet, I'd say, but it's certainly indicating it will be difficult to source if you're using any sort of China related company.
Okay, that's even more brutal than I thought. That could be a
I mean, I think just worth saying about Megapack opportunity beyond the US, because that's certainly strong. We have the Shanghai facility now ramping up quite significantly, um, and a lot of markets in the world are really just starting their energy storage journey in a way. If you look at kind of the growth year to date in places like Chile, Australia, Saudi Arabia, really incredible growth rates. Um, Quite a nice stat which we had from the first half of the year was the kind of era of these gigascale projects. So these are energy storage projects that are over 1 gigawatt hour, which is quite crazy when you think about, you know, back in the day when we used to talk about the original kind of mega factories, and the first gigafactory was a kind of amazing thing, and now you have single energy storage projects which are essentially a giga size. So that's a really impressive thing. And this year, in the first half of the year, we saw 14 of these installed. Last year, we saw just 4 of them installed in the whole year. The year before, I think we saw like 2. So these are really kind of coming fast and going to drive a lot of demand. So there's a lot of opportunity globally for Tesla and all the other energy storage players as well.
it's worth pointing that out because as Tesla said at the earnings call a couple days ago, they have a very diversified order book. So it's not just the United States. Um, so there's it sounds like there's going to be some difficulties there, but the fundamental demand for megapacks and grid storage products is strong fundamentally because they're such a good value proposition.
Yeah. Mm.
Now, one thing that also Steve Levine, I'm not sure how you say his name. Is it
Yeah,
Levine or
that's right. I think
okay?
that's right. Yeah.
Steve Levine, he wrote an article basically saying that although these foreign excluded entities of concern, I forget what the exact acronym is,
Yeah.
FEOC,
Yeah.
um,
Or PFE these days, I think. Prohibited foreign entity. Yeah.
prohibited foreign entity. That's a little bit
Yeah.
easier.
Yeah.
um, although those do pose some challenges, he was talking about that these they can set up joint ventures where those Chinese companies can take up to like 40%.
Yeah, I think potentially it's another one that's like the guidance is going to be the real clincher on that. There's difficulties around, what is material assistance, because I think as soon as you've provided material assistance, it's becomes very difficult to kind of separate that. I did see that Ford CATL have said that their planned LFP facility, they think it will still be eligible, which there are some kind of question marks around how that is possible. Speaking to a few different people, there's been some suggestion they would potentially be under some kind of grandfathering clause because that deal is already in place. But yeah, a lot of uncertainty, I would say, around partnerships with Chinese players, how that's going to operate. It may be more a case that we've seen already the Korean players make quite a big push towards LFP, and we've seen quite a few of the US OEMs from the auto side in recent weeks kind of announce bigger commitments there. Right now, they are getting their cathode from Lopal in Indonesia, which is Chinese ownership structure. But the plan is for them to get it from LNF, which is a Korean cathode manufacturer, who doesn't have a track record of doing LFP, but is entering that space. So there are a few kind of hopefuls on the pipeline, but yeah, right now it's still that kind of Chinese dominance.
Yeah, so it seems like the primary alternative, our best hope at the moment sounds like it's Tesla. Not to be a Tesla fanboy, but it's from what I've seen, there just aren't that many alternatives out there, and Tesla has done a good job of positioning themselves. Not that they're there yet completely, particularly for LFP, but they have been working on it for a few years.
Yeah. Yeah, there's a couple, yeah, LG for sure. They brought on their facility in Michigan recently. AESC brought on theirs, supplying Fluence. And then you also have a few kind of, I guess, domestic players or hopefuls, both in the cathode space, people like Nano One and Mitrichem, and then through to the kind of cell side, like Arnex Energy, who all have quite ambitious plans for the next few years.
Right. So there is things in the
Mm.
works, but
Yeah.
I guess we just have to wait and see how it all shakes out. Now, let's look at the limits here, because there's another thing that Elon said at the earnings call, that basically the U.S. grid is 50% utilized in terms of the amount of energy that it can output. And the reason why it's not all utilized is because we don't have any way to store it and align to synchronize the supply and the demand. Now, my understanding is that there's limits to how much of that we can tap into. And because there's these peaks and troughs, and there's places where you can use batteries and megapacks to where it's commercially viable, basically.
Yeah.
And say, for instance, if we're willing to curtail 0.5% of the U.S. grid, then that opens up about 100 gigawatts of headroom. But if you try to go to 1%, that only opens up a little bit more, and it's
Diminishing returns.
diminishing returns is the word I'm looking for. Thank you for rescuing me. So is that accurate? Can we actually tap into that 50%, and what's actually likely?
I mean, I think it's a bit of a kind of idealized scenario. In the real world, ultimately things are going to be driven by economics and also the kind of grid availability and architecture. So yeah, the reality is the market, you know, won't evolve in such a way. But I think it does understate the kind of opportunity within the US. So, I mean, in terms of, I guess, our market outlook, um, we're expecting US kind of annual installations to triple by 2030 from kind of where we are now. And that would equate to kind of I guess, a cumulative grid capacity of about half a terawatt hour by 2030. By that point as well, worth noting the global market, we're expecting to be about 3 terawatt hours. So um, the US has a decent market share, but we're expecting, I mean, China making up well over 50% of that, but lots of other markets to start to evolve as well in the next few years. So yeah, a lot of the total addressable market is very large, I would say, in that sense, but maybe not as easy as just going, yeah, half it and off we go, or double it and off we go.
Now, if we're just to expand the discussion a little bit before we close out the discussion, I know myself and a lot of other people are curious about what the overall plan or the strategy is from the new administration. I've been listening to all the discussions I can from Chris Wright and Doug Burgum to understand what exactly their thinking here is. Because overall, from what I've seen, it seems like a lot of what they're doing might actually reduce the access to electricity and energy and power over the next few years. So they they're saying the right things in terms of let's increase our energy supply, but I don't understand what their actual goal is. I have some ideas. So what's your view? What do you think their overarching strategy is to try to meet these electricity needs that we have from additional EVs on the grid, electrification, data centers, etc.?
This feels a bit like crystal ball gazing. I don't know if I have a good answer to that one. I think
Okay.
it's not necessarily clear
Mhm.
what these how these two things kind of add together. Um, Whether it's because they want to support the oil and gas industry, whether that's the kind of key priority, um, doesn't necessarily seem obvious that energy security, in the sense of, particularly around like AI and data centers and the additional demand there, is as much of a focus. Um, so yeah, it's not obvious to me what the where the where the pathway is. I think there's one thing to be said about if we look at the growing demand for energy, for electricity in the US market, and if we think about a large proportion of that is going to come from tech companies who are building these data centers or equivalent companies. um, if you move to a system where, instead of the taxpayer subsidizing these the energy infrastructure to support it, but rather the tech companies themselves supporting, building this infrastructure, they're still going to do it, right? At the end of the day, they need the energy, and if they can't get hold of a gas turbine and solar and storage is still, affordable and cheap, they're going to go down that pathway. So maybe there is a degree of, they want to push that pressure away from the taxpayer subsidization to, the tech companies themselves forking out and paying for it.
That's the conclusion I've come to, especially after watching the All In, the summit that they had, and they were discussing AI and the energy needs. It does sound like they're going to try to circle that square by reducing permitting as much as possible, trying to just make it a lot easier for a for these tech companies to build the energy themselves, and in that manner reducing the strain on the grid around them and reducing the impacts of increased electricity prices. Um, but that means they're gonna be end up paying extra for this stuff. But it seems like they can afford it with
Yeah,
as much money as they're dumping into these things.
yeah,
Okay, well, this has been very insightful. I got so many nuances today that I was missing. So I appreciate that. Thanks for the interview today, and I'd love to chat with you again sometime about these things because I have so many questions. I'm still learning about the grid and batteries, etc. And you guys do a lot of good work there and reveal information that I just wasn't aware of before. So thank you.
yeah. Likewise. Thanks for having me.